Okay, aloha everyone. I'm Shenoa Farnsworth and I'm the managing partner at Blue Startups. If you're not familiar with Blue Startups, we're a venture accelerator in Honolulu, Hawaii, and we invest in and mentor technology startups both from Hawaii and from outside the state. We have been doing that since 2013, now 11 cohorts and 82 companies under our wing. So if you want to know more about Blue Startups, you can get in touch with me or you can go to our website, bluestartups.com. It is my pleasure today to welcome Chris Hemmeter of Thayer Ventures. He's been a great partner and friend of Blue Startups since the beginning. He's an investor in the travel space and more recently transportation as well. And he'll tell you more about himself, but he has roots here in Hawaii too. So we're excited to talk to Chris today and get a feel for what's happening in the travel industry now and maybe in the future and perhaps forever changed. We'll see what Chris has to say. All right, Chris, take it away.
All right. Thank you. Well, it's great to be here, everybody. I wish I was there, however, enjoying the incredible, unprecedented lack of crowds, sort of the double-edged sword of this demand shock driven by coronavirus. So I'm going to take you through some slides in a minute, and I'm going to breeze through them very quickly. And then Shenoa will have a copy of the deck. So if anybody wants a copy afterwards, reach out to her. You can reach me, Thayer Ventures website has my email address, chris@thayerventures.com. Happy to engage after if I can be helpful in any way. Would really be happy to do that. And I'll take you through just a brief overview of what we see happening in the space that we invest, a little bit more about why we're investing there, and set up perhaps maybe some thoughts of where to from here, and then we'll open it for questions. So as Shenoa mentioned, born and raised in Hawaii, I grew up in a very entrepreneurial family and started joining the world of entrepreneurship in my early 20s, which means that I'm hopefully unemployable and have spent my entire life creating my own work, which has been, a double-edged sword, but a great journey. And then about 10 years ago, started Thayer Ventures, and we are specifically a sector-focused small fund. We invest early stage, which in the world of venture means Series A. We tend to be Series A, Series B, which are companies that typically have about $1 million in revenue or more. In other words, they're past that early stage, seed stage, beta product, and are beginning to operationalize and commercialize their services or their tech. We are focused specifically on travel and transportation. And one of the things that has been very important to me from the beginning of founding this firm is that we wanted to be a true value-added investor. So we've not only surrounded ourselves with a team that understands travel and transportation, but also many of our investors in our fund are players in the space. So Marriott Hotels, the largest hotel company in the world, is a limited partner in our fund. Hyatt Hotels, Enterprise Holdings, Host Hotels and Resorts, Travel and Transportation, a bunch of other companies from different parts of the industry. So we like to believe that we understand some of the moving parts and some of the problems that are being solved in this industry, and we bring value to the companies we invest in by helping them make connections and grow their sales. Frankly, I think if you're going to be a value-added investor in a company, that means you better be able to open doors and help with business development, sales, and strategy, which is what we do. So I'm going to now share my screen, and I'm going to assume that you can all see this. Yes? Okay. So first, why travel? Why did we focus on this particular category? And I'm going to breeze through this very quickly. I think, as many of you know, it's one of the largest industries in the world. It's increasingly complex and dynamic, a very, very deep and complicated value chain. It's also been an industry that has historically been resistant to the adoption of technology. And because of a number of interesting sort of disruptive and dislocating forces over the last several years, that has been changing and accelerating. in particular, this industry, very sleepy until the mid 90s, and then completely transformed since then, right? If you think about the travel industry in the early 90s, they never took the online travel agencies seriously. They subsequently became a true threat to innovation and to brand, frankly, in travel, which has led to now this sort of cascading series of disruptions and so forth. I can say for almost certain that 10 years ago, nobody in the hotel industry would have seen Airbnb coming. Now, of course, they're a major player in the space. So a very interesting dynamic in travel. What does this all mean for an investor? It means, here you have one of the largest industries in the world with a very complicated value chain that has only recently been facing extreme disruption and a history of resistance to adoption of technology. That's the absolute perfect formula for the development of startups and entrepreneurship. And that has truly proven to be the case. I think, as many of you know who have studied travel, it is a very complex ecosystem. Travel distribution, the digitization of travel has been accelerating very fast across the entire shopping experience. There have been many, many, many interesting startups over the last 20 years that have disrupted this industry, and that has been truly accelerating. Along the way, there's been this great dynamic of consolidation by some of the blowout leaders. So, again, if you think about an environment that's ripe for startups, you'd like to see something where there's a lot of opportunity to do good work. You'd like to see a very complicated value chain where there's many different points to do interesting things. You'd like to see an industry that's going through some level of consolidation. So the M&A activity is creating liquidity for startup founders and for investors alike, which attracts more capital. And then in the end of the day, it begins to attract more of the big horizontal tech companies that are coming in and buying travel assets. So again, sort of, all of the things are happening around travel that makes this an incredibly exciting and interesting space. And then boom, right? We get hit with one of the most powerful, unprecedented shocks in business history. And if you had to draw a bullseye around industries that have been most affected by this shock, you'd have to say travel is one of them. So if we just sort of zero in on, okay, what does that mean in the US alone? I mean, these are staggering numbers. If somebody had shown you this slide a year ago and said, I think that there is a 0.1% chance that this could happen next year, you'd say absolutely no possible way. Yet here we are. When you compare hotel occupancies, ADR, and overall RevPAR to prior year, the drop has been absolutely astonishing. It's a painful period for our industry, and one that is not going to recover quickly and is not going to recover tomorrow. And I think there's plenty of data that suggests that this is going to be a 4-5 year cycle to get back to 2019 levels in the broader travel landscape. But what does this mean to us, to innovators, to those who are investing in the digitization of travel? In a lot of ways, I think it means opportunity. And before I sort of get into the rest of these slides, and this may come up in the Q&A, I would suggest that any part of the travel supply ecosystem, which is sort of what I just focused on, right? What's happening in the hotel sector. Any part of that travel supply ecosystem that was resisting digitization of their business is no longer doing so. I can tell you for certain that the interest in software across the travel ecosystem has increased dramatically during COVID. Why? Because if you are a travel supplier, you fundamentally are broke. You have no idea when you're going to break even again. You have no way of forecasting future demand based on what's going on now. You have to have technology tools that enable you to be the most efficient and the most productive you possibly can be. And you have to have access to as broad a swath of the market, at least in the top of the travel funnel, as possible. So it's actually a very interesting time to be in the technology game in the industry that's being hurt the most. So what are some of the big and interesting trends that we see coming out of this enormous shock? Well, one of them has been this absolute transformation of what it means to work. As you know, we've been undergoing one of the great experiments in human history about remote work. And I'm certainly not going to say that business travel is dead. In fact, I do not agree with that at all. And we can talk about that a little bit later. Nor would I suggest that events and meetings are dead. Absolutely not. I believe that that's coming back for certain. But there will be now this sort of new accepted norm of the nomadic worker. And how does that affect travel and travel destinations? It could have very interesting ramifications for the kind of products that Hawaii, for example, could focus on, where it's, you know, long-term or mid-term stay products, even short-term stay products, but are more enabled to be remote work environments for people who want to just get the heck out of Dodge. So some interesting changes happening there. We've also really seen it in the alternative lodging assets, and as an investor in Sonder, we can talk about the incredible difference between Sonder's occupancy rates and their hotel competitors during this period for a number of reasons. We've also seen, of course, through this period, an incredible sort of surge of, you know, people engaging in digital platforms for all kinds of things that they do, whether it's, you know, banking, groceries, apparel, travel. There has been an enormous explosion of trial, and some of the early data is suggesting that that sort of surge of digital trial is likely to convert to long-term participation. So, you know, if you think about industries, not just travel, that have been affected by COVID, there is still going to be, in our view, this sort of acceleration and swing towards, you know, the e-commerceization of just about every industry on the planet, which is really interesting and is going to create many opportunities. And it's not just in the consumer side, it's also in the B2B side, and how companies are using digital tools to engage. So again, for software thinkers, for innovators, and entrepreneurs, this is a time, you know, it's extremely interesting, albeit painful and difficult. Very interesting. What underlies this is the same things that have been true even pre-COVID, which is, you know, the fundamental fuel that drives innovation is data, you know, data and analytics. There is no industry, no two industries, frankly, other than travel and transportation, that are more likely to be affected by data and analytics. I think this is particularly true in the new world, because if you think about it, in 2019, the greatest objection that many travel suppliers had to analytics tools that help them with their forecasting was, I don't need it, I'm doing well, and I'll just basically guess that I'm going to do about the same thing I did last year. That's gone. There is absolutely no fundamental way to forecast travel demand based on prior year experiences. It's a new world. So you need to have tools that are much more real time, looking at the momentum of shopping, and not just booking, but shopping as well. And I would argue that travel's not dead. I mean, travel is definitely in a world of hurt, but it is not dead. And consumers, particularly in our country, view travel as an entitlement. People are bursting at the seams. They are absolutely going stir crazy and can't wait to get the heck out. We think it's going to be leisure first. I think that's nothing new about that. It's going to be drive-to markets, which doesn't really help Hawaii very much. But travel is it is pent up. When the doors open, the surge will be there. And I think given Hawaii's dependence on leisure, the surge in travel will be intense. So enjoy the uncrowded beaches while you can. It won't last forever. And we see it in some of the booking data, the shopping and the destination data is really telling, and a lot of interesting things happening. And so, the big question is, how deep and how painful is this, right? And do we have enough liquidity in the marketplace to sort of drive that catalytic change forward? And, at this point, it's just too difficult to say. And we really are at a very fundamental moment now where our government has to decide if it's willing to use our borrowing power to truly drive, well, it's not actually to drive business forward, but it's to mitigate the damage, right? I mean, we have, as the United States, a virtually unlimited capacity to borrow and invest back into our society, frankly, to keep the floor up, because frankly, that's the big risk. I think that the biggest risk to 2022, 23 is economic, not health. It is very likely that we will have treatments, we will have vaccines, we will have sort of moved through this period where the health factor will not be as daunting then. But if we don't do the right thing and drive liquidity into our markets and into our society, then we'll be facing lingering economic damage that will be around for some time. So hopefully, I mean, and I frankly think that this is a pretty astonishing chart, right? The dark blue circles are, the kind of liquidity that governments put into their countries during the 2008 financial crisis. Remember the Great Recession? The blue dots are what has so far gone in just as a result of COVID. And I would expect that United States bubble is going to get a whole heck of a lot bigger soon, particularly in an election year where the economy is such an important thing for both parties, frankly. Anyway, so that's our take on the world. I think that, in a nutshell,